Hello, guys. Welcome. It's been a while. I've had a IRL project. I've been busy, so now I'm back, officially back. I'll try my best to upload like every week or every 2 weeks at least one video. Be active on my socials. But anyways, let's get to business now. This year has been very interesting. A lot of weird like we are in a weird market condition. It's very tough, but regardless how tough the market can be, as long as you have one model and you have a consistency in your risk management, you trade one maximum 2 days a day, two trades a day, and you should be fine. As long as you have data, decent win rate. When I say decent win rate, like if you have a 40% win rate strategy, you are a profitable trader if you follow very consistent risk management. Like you're so strict to the T on your risk management. Even if you're trading, I don't know, based on feelings, based on, I don't know, you name it, which strategy, it will work as long as you have data and it works, yeah, right? It has a so the aim here, if you have 40% win rate strategy, no matter what you're using, you will be profitable because at the end of the day, you are the one who's clicking buy and sell. So never blame the strategy if you're losing or winning, or never blame the market condition. You're the one to be blamed. uh, Stick to your rules, risk management, fix your psychology, and I promise you, you will be profitable. Right? So now let's get to this year. In this video, I'll be backtesting the first ORB model that I uploaded on my YouTube video, the one that I backtested 2023 entirely, with some adjustments. Like something to filter, right? Like how I will show you how I'm marking the inversion, fair value gap, when to move to break even. I'm moving from last year. I'm moving to break even way earlier than 1 hour, and I'll tell you why. The reason, like, of course, everything that I will be showing you is logic. Like why I'm moving my to break even earlier. It's purely logic, right? Not just random. Because let's say if you want to go to aim for 1 hour, yeah, and then price already swept high time frame key level, and then your 1 hour is just cooked, right? You like the trade will be lost, right? So that is why when you move to break even, or you are targeting like 2 hour, 3 hour, 4 hour, you have to make some knowledge out. Like the TP has to make sense. Also, the break even has to make sense. Yeah. Let's start from beginning of January, and also I'll you can trade Mondays. Mondays are clean. Nowadays are very clean. Even last year, Mondays are actually not bad. Even though I have data that Mondays are iffy, a bit funky, but it's just this year it's actually very well. It's doing very well. So why not just add Mondays to your thingy, yeah? As long as you are avoiding FOMC days, so FOMC and Fed Powell, and if Trump is speaking, just try to avoid that day, because it's the news are a bit unexpected. The volatility are extremely high, yeah. So let's just avoid that. So FOMC out of the way. What else? FOMC meeting minutes as well. So there are four. Anything when you open Forex Factor and you see FOMC, whether it's meeting minutes or press conference, you just avoid that day. It's usually on Wednesdays. You see President Trump is speaking, red folder, orange folder, just avoid it, bro. Avoid it, okay? Um. Well, obviously, bank holiday. We do not trade. Fed Powell is speaking, like today, for instance. Today is Monday, 30th of March. Powell is speaking in the middle of the session, 10:30 a.m. So we avoid that, because there's a high chance that the price is going to be choppy. Statistically, the price shows that when Fed Powell is speaking, it's choppy, right? So now let's get to business. What do? We go to New York Open, yeah? On the 9:30 candle, same thing. We mark the high and the low. So now if you want to ask me, what did I change? The rules is still the same. You only take longs if the price is above the orb, and you take shorts if the price is below the orb, right? The entry is from 10:01 up till 10:59 a.m. Okay? So what did I change? The inversion fair value gap. Let's assume you are going long, yeah? This is the orb. Price is below the orb, so you're gonna go shorts. All right, so let's assume we have a fair value gap here and a fair value gap here. There's two fair value gaps above each other, yeah? When the price inverts this fair value gap, you do not go shorts. You will go short if the price inverts this fair value gap. So you have to, you need to see the price inverts both together. You only do this if there is two overlapping inversions on top of each other. That is the only condition where you take the two IVG. For instance, let's say there was a gap here, but on the candle below it there is no gap, but on the candle below here there is gap. Then you take, in this case, the first inversion. I'm gonna demonstrate to you when I start backtesting. It will make more sense. Okay, so that is the first condition that I'm changing in the strategy. Second thing is the break even. So let's say you entered short here, yeah? Here you entered short because there is an inversion. Your stop is the same at the recent swing high or swing low if you're going for longs. And once you enter, when do you move to break even? You open the 5-minute time frame. You open the 5-minute time frame and you see, do we have an external liquidity? What does an external liquidity means? Swing points on the 5-minute, clear swing points. If there is a swing point nearby, let's assume it's this one on the 5-minute, then let's assume the gap is here, yeah. So you will move to break even before hitting 1 hour. Maybe it will hit 0.4 hour, 3 hour. You don't care, yeah. You actually don't care. Hold up. Okay. The reason behind that is that because when the price sweeps a higher time frame key level, you will expect a deeper retracement. And how do you how do you expect or predict the price to go? You will never know. You will never know. But the price will have a deeper retracement. It might retrace back to your stop and stop hunt you and then go back to your TP. So in this case, you're just protecting your capital, right? So we move to break even if the price sweeps any external liquidity on the 5-minute, and if there is a 5-minute fair value gap, you will also move to break even. So for instance, let's say the 5-minute fair value gap started here, then you'll move to break even here. Yes, it doesn't make sense, like, oh, I'm moving to break even early, I'm pushing out. No, you're not. You're just protecting your capital. And I'm gonna show you why. All right, I'm gonna demonstrate everything here. Okay, so that's the condition where you move to break even. Now regarding the TP targets, yeah, let's assume we inverted the gap here, right? And that is a swing high, so you enter shorts here. Your stop is at the recent swing high. Where's your TP? Don't go 1 to, like, you can go 1 to 5, 1 to 10, doesn't matter. But when you aim for something, it better make sense. But the most reasonable risk to reward is to hit this TP, which is going to be a 5-minute external liquidity. Well, that would be 1.7 R. It might be 0.8 R. It might be 1.11 R, 0.91. It doesn't matter. Just take a piece, take the piece of the, cake, and then be happy with it. Because let's assume we inverted a gap here, and there is no fair value gaps here on the 5-minute to move to break even. There is the external liquidity of the 5-minute is going to be here. Then in this case, you'll be aiming for this TP, which is going to be 3.4 R, and I think you'll be happy. And then when to move to break even, that's up to you. You can move at 1 R, you could move at 1.5 R. It doesn't really matter, because on the higher time frame there isn't any internal or external liquidity to move to break even. So you'll assume the price will dump from here. Okay, that will be it for the break even and for your targets. So now let's just get to back testing. Yeah, so 15-minute 930 candle, that's the high and the low. You go to the 1-minute time frame, and then let's move the price. So price above the orb, that is our inversion that we are interested in. That is our only gap here. So there's no gap above, so we take this if the price inverts it. The price did invert it, but when? At 11 a.m. So 11:08. So that is outside our trading time zone. So there is no trade this day. Okay, we go to the next day. Okay, that is the high and the low of the that's the high and the low of the 930. Okay, we do have an entry here, right? So the price did not invert any gap. It did invert here. Let's see. Boom. So that is our entry. Right, your stop is at the recent swing low. That is not a swing low yet, because we don't know what's the next candle going to be. So that is your first recent swing low. Okay, you will be targeting what? The next 5-minute external or like external liquidity is gonna be here. Well, that is a 1-to-1. And when do you move to break even? On this external liquidity on the 5-minute. Now we go back to the 1-minute, place the order. I risk 0.5%. Okay, now price hits our break even. We go to break even, and the price hits the break even, and you would have been stopped. So when did you move to break even? 0.3 R. So we just saved our asses from getting stopped that day. Yeah, go next day, mark the high and the low, same thing. Man, I'm trying to create an indicator on the forex replay for the orb, so that you don't draw the high and the low. All right, so Wednesday. Nope, nothing. We did invert here. That is the inversion. Yep, that's the first inversion. Your stop is at the recent swing low. But what are you targeting? There isn't anything else here to target, so I'm targeting here. That is 0.7 R though, so you should be happy. I mean, if the price takes it, you're winning. And when do you move to break even? You move to break even here. Oh, that is a break even. And you get stopped break even. Okay, go next day. Well, the price would have went all the way up, but yeah, we are following rules here. I'm just sharing you my experience and how I tackle things. It's up to you how to manage it. Maybe if you don't like the way how you move to break even early, it's up to you, but you will just protect your capital, right? So now we are on Thursday. Yeah, there's nothing on Thursday. That is the second week of January, because January started, uh, I believe, yeah, here. So it was Thursday and Friday. So we do not trade these days, we trade the week after. That is the high and the low. That's Friday, right? Okay. All right. So interesting. So what do we have here? We have a gap here, yeah. So what did I say? If there's two gaps overlapping each other, we take the second gap, which is this gap right here. That is a small gap. Yeah, that is a small gap. So you do not enter on this gap, you enter on this inversion. So up till now, we do not enter the trade. We wait for this gap to be inverted. This one up here. All right, we did invert here. We place our market order, and then we open the 5-minute time frame. What do we have? Well, this 5-minute candle is not yet completed, so the 5-minute gap already been mitigated. So technically, that is our TP here, this high, and we have no break even. So we just don't move to break even. It's up to you. If you want to move to break even at 1 hour, then that is completely up to you. And now we enter market order and TP hit, because price is very price moves from internal to external liquidity. Yeah, so that is a very clean target to go for. That's a very clean trade. 2.13 hour, lovely. I mean, even if you move to break even at 1 hour, you're still safe. But I'm just sharing with you the most logical way for me move to break even. Yeah. All right, mark the high and the low. All right, so we have a gap here, right there. The price inverts that gap, but as we say earlier, if there's two gaps above each other, you take this inversion, not this one. Well, we just saved our assets from getting stopped right there. But let's see if the price inverts. Yeah, that's our gap here. All right, price inverted here. Market order, stop at the recent swing low. You move to break even where? Here. And where do we target? So we open the 5-minute. We have this swing high here. We have this previous daily high here. You can aim for this, you can aim for this, because it's just if the price wants to go up, might go up to previous daily high or to this intermediate swing high, which I feel like this is the more logical TP, because after the price takes this, it might have a deeper retracement or reversal, and this high will be predicted high. But let's see how this will work out. Market order, move to break even, and TP hit. Beautiful. That's 2.25 R. We go to next day. High and low. All right, so we have an entry. That's an inversion. Market order here. Stop loss at the recent swing high. Where is our external liquidity? It's this one here. That's our break even. Do we target? We target here. That's the London low. That is a 1 hour. Oh, we move to break even now because the price sweeps it. And TP hit. The price went all the way down to Tokyo low. You could do that, but you better the TP targets, it's just you can be very dynamic. Yeah, you could just aim for 1-to-1, but the point here is that when to move to break even. Yeah, it's very crucial, and always make your TP targets logical. So you could aim for London low or Tokyo low, but the safest is London low because the price might sweep London low and fully reverse. You can just take your partial to profit at London low and then aim for Tokyo low. That is completely up to you. Okay. Go next day. And this price action, like I'm not cherry picking. That's just this year. That is this year PA. Yeah. All right. So I think that's a loss if I'm not mistaken. Did we invert this gap? Oh yeah, we did. So that'll be our first loss. Your entry is here. Stop at the recent swing high. And you get cooked completely here. That's our first loss. 2 more days to trade. Swing high, swing low. I don't think there's trade. Yeah, there's no trade this day. It's choppy PA. All right, Friday. High and low. There is no gap. Well, we do have a gap here. That's a very nice displacement. That's the inversion here. Where to move to break even? Well, that is your break even right there. It's a very small break even. 0.3 R. What do you target though? We are targeting this low right there. That is a 1.5 R. You can target previous day low, Tokyo low, up to you, right? Just target the first swing low that gives you risk, like one risk to reward, or the gaps, or if you have if you want to aim for a bigger RR, but you have to take partials along the way or trail your stop. But I'm happy to take this small piece of the pie. All right, move stop to break even, and TP hit. Let's see if the price went to Tokyo low. It did not. Yep, stops you out. So that'll be that'll be it. That'll be pretty much it though. It's very simple. It's very simple. So you move to break even earlier, just protect your capital and protect your, your psychology, right? Because the moment you move your stops to break even, you'll just, feel relieved. Yeah, of course. Because you don't want to be sitting on drawdown, obviously. But that'll be it. If you have any questions, please drop it on the comment, like on the comment section, or you can join the Discord. Ask me. It's my free Discord. You could ask me whenever you want. I try my best to answer everyone. But that will be it. I hope you guys have a great day, great trading for the rest of the year, and good luck. Bye bye.